Well, that didn't last long. Just about a month ago, I gave my price prediction for where Nvidia's stock price could be at the end of 2025. And Nvidia's stock has increased by so much in this short period of time that it's made that stock price prediction almost obsolete. Now, Nvidia's stock price has increased because of the rising effectiveness of AI and the demand it caused for companies, institutions worldwide to start implementing AI in their business, in their products, in their services. So in this video, I'm going to revisit my Nvidia stock price prediction. I'm going to update my price prediction for Nvidia stock and where it could be by the end of 2025. So let's get into the numbers.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the numbers I'm going to need is Nvidia's current stock price. As of this recording, Nvidia is trading at a $739 per share stock price. Now, I recommended Nvidia stock as a buy. In fact, I placed Nvidia stock on my list of top stocks to buy for 2024. And thankfully, the stock price has increased since I recommended it. Still, I don't think Nvidia's stock price is too expensive. I think Nvidia's price has increased because of the increase in the business performance, which I'm also going to share with you in this video. But let's look more at the assumptions I'm going to use for my stock price prediction. So another assumption I need is the price to earnings ratio. This is trading currently at 97.4. And so I want you to take a look at why I use the price to earnings ratio. The price to earnings ratio is an important financial metric I use to determine which stock is more expensive or if a stock is too expensive. Let me show you this example here. I have two stocks, one trading at a market price of $100 and one trading at a market price of $12. The one trading at a market price of $100 has an earnings per share of $2.58, while the other has an earnings per share of just 11 cents. When we look at their price to earnings ratio, the one trading at a market price of 100 is trading at a price to earnings of 38.76, while the one trading at a market price of $12 is trading at a price to earnings of 114. So in this example, the one trading at a market price of 12 is actually more expensive because I'm paying 114 times earnings to purchase this stock. That means if the company was to pay me earnings per share every year as a dividend, it would take 114 years for me to receive my money back. Whereas the other stock, it would pay me back in 38.76 years. Now, there's a lot more to think about in this equation, but to simplify, that's an example that shows you why a company with a market price higher can actually be cheaper than a company with a market price that's lower. Okay, so now that you understand the importance of the price to earnings ratio, you can see Nvidia is currently trading at a PE of 97.44, which is down from the peak level of over 240, but still above the levels the stock traded at before the boom in 2020. So it's above long-term levels, but below its highest level. And if I look at the forward price to earnings ratio, which is incorporating the earnings expectations for the next year, then the stock price doesn't look expensive at all at a forward PE of 29.34. But to make my stock price prediction, I'm going to use the 97.44 because I'm going to use the earnings per share estimate for 2025 to make the prediction for 2025. Since I'm not using forward EPS estimates, I'm not going to use the forward price to earnings ratio. So speaking of those earnings per share estimates, for its fiscal year 2025, Wall Street analysts that are following Nvidia stock expect it to deliver $23.76 in earnings per share in fiscal year 2025. And you can see that's going to be nearly double its earnings per share in 2023 of $12.29. You can start to understand why the stock price has increased so much, because Wall Street expects Nvidia's profitability to increase to almost double in these next 2 years. So the expectations are really high for the foundational business improvement. It's not just hype around artificial intelligence, it's actual tangible revenue, sales, cash flow, profitability that's driving the growth in Nvidia's business and in Nvidia's stock price. So if we are to incorporate the updated forecast and the updated price to earnings ratio, you can see at a price to earnings of 97.44 and an earnings per share of $23.76, we combine those two, Nvidia's stock price could reach $2,315 per share by the end of 2025, which would be nearly triple the $739 share price it's currently at today. So even though it's already up significantly to start the year in 2024, according to Wall Street estimates, its stock price could rise even further. Now, if the price to earnings ratio was to fall, which is a scenario I expect, then its stock price will still increase to 1,900 at a PE of 80. At a PE of 70, the stock price could rise to $1,663 per share. At a PE of 40, the stock price could rise to $950 per share. And so, regardless of the scenario I looked at here, all four scenarios suggest Nvidia's stock price could rise from where it's at now at $739 per share. So, in order for Nvidia's stock price to fall, one of two things need to happen. Either the earnings per share in 2025 need to come in below what Wall Street expects their earnings per share to come in, or the valuation needs to come down significantly from where it's at now. So even if the valuation falls from 97 to 40, the stock price is still expected to increase. The valuation would need to come down to somewhere around 30 for the stock price to decrease from 739 in 2025. So there is this built-in enthusiasm for Nvidia stock, and that enthusiasm is coming from the increase in profitability. It's the increase in earnings per share expectations that's driving the growth in Nvidia's stock price, because it's not just these 2 years that Nvidia's earnings per share is going to grow. I suspect that AI is going to drive increasing revenue growth for Nvidia between now and 2030, not just between now and 2025, right? This is just the forecast that I have available from this source. But between now and 2030, I suspect Nvidia's business will continue to grow, given that we're just in the very early stages of the development of AI. We've just got really one big use case in the large language model, right, with ChatGPT, and that drove all this demand for AI. Imagine a next level technology that comes out, something in healthcare, something in robotics, something in driverless car technology that's going to drive the next level growth in demand for AI. So it's just in the early stages of development. We have just really one powerful use case in large language models. If there's another use case that comes up in the next couple of years that could drive the next level growth in demand for AI chips, Nvidia is arguably at least one step ahead of the competition. Many people say it's at least 2 steps ahead of the competition. Regardless, it is ahead of the competition, and there will take time for competition to come in. Maybe they'll never catch up to Nvidia, but competition is coming in, and they will take market share because enterprises don't like to be beholden to one supplier. So they're going to give business to others like AMD and even Amazon that's developing its own chips, just to diversify their supply base. So Nvidia is not going to take 100% market share or anywhere near that, but it's certainly going to benefit from that rising tailwind in the effectiveness of AI. So if I was to give my updated stock price prediction for where Nvidia stock will be by the end of 2025, I would say it's going to be with the PE of around 40. And I would say the stock price will be in the range of $950 per share to $1,025 per share by the end of 2025, which is still considerably above where the stock price is currently trading at $739 per share. Remember, I've used a lot of estimates and assumptions. Many of them are imprecise because nobody knows what's going to happen in the future. So remember that when you're incorporating this analysis into your decision making. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.